Okay, we're 1 day away from an FOMC meeting. As you can see, there's a slight pullback in the market, slight pullback on Bitcoin. And I'm expecting a lot more volatility in the next 24 hours, in the next 30 hours before the FOMC. I'm going to show you why I'm expecting volatility before this FOMC, but expect volatility. Then I want to talk about something else. I want to address something very big here. I want to address this chart over here. This is the ETH BTC chart. Now, I don't know about you, but I haven't seen the chart look that bad for a long time. And I want to talk about this because I think that there's something that people aren't talking about, and that's in light of the ETH upgrade, which is actually happening tomorrow. There's a massive ETH upgrade, which is happening sometime tomorrow. And I think that a lot of people are missing what's going on at ETH, and I think that ETH is in an existential crisis, and I don't know if ETH can recover. So I'll talk to you about why ETH can't recover and why I think we should expect volatility in the next 24 to 48 hours, and exactly how to trade that volatility. So if that sounds good to you and you are one of the 1.16090 subscribers, obliterate the like button. If you're not part of the 1.16090 subscribers, then subscribe and then obliterate the like button. Let's get the show on the road, guys. You know, on days like this, as David, one of our business development guys, our head of business development, says, all you need is Bitcoin and SQD. All you need is Bitcoin and SQD. I told you guys to buy SQD, specifically if you were part of front runners. I've been telling you guys to buy SQD since it was 7 cents. And in this market, we now have SQD at 24 cents. And don't tell anyone why it's happening. It was in front runners yesterday. I did post in my front runners channel yesterday. I posted exactly why it's going to go up and why it's going to continue to go up. If you want to be part of Frontrunners, there is a link in the description over here. If you join this month, we'll give you a 30-day money back guarantee. If you're not happy in 30 days, you can take your money back. So there we go. You can just join using that access. I called this thing, here is the post. Called it at 7 cents, but have been calling it all the way up. And I think it's got a lot more upside. And before the end of this week, I think I'm going to drop another one of these gems. So if you're not already part of Frontrunners, you can join today. If you're unhappy in 30 days, you can leave. There's a lot of alpha. It's our private Discord group. Everything happens there. There's an Ask Rand channel. There's a lot of alpha. There's charts every single day. There's calls before the calls happen. Everything happens in Frontrunners. All right, so that is Frontrunners. Now remember, guys, we've got a big day today because tomorrow is FOMC. And it's quite a big FOMC. Why? Because the Powell has to make a decision now as to whether he's going to reduce interest rates or not reduce interest rates, specifically when inflation is nearly gone. So you got inflation nearly gone and you got the economy almost grinding to a halt because of all the tariff, expectations, or I don't know, what's the word? The inability to have expectations because people don't know what the hell's going on. So because of that, there's a lot of turbulence. And so tomorrow we've got a very important FOMC. Tomorrow, we're not going to be live at this showtime. We're going to just be live at FOMC. We'll start half an hour earlier. So we'll start talking about the news of the day. Then we'll go directly into FOMC. So we'll do one show tomorrow. So you're not going to see a show at this time. You're going to see a show later, unless something crazy happens on the markets. Then we'll do a show at this time. Anyway, let's talk about what is actually going on in the markets right now. So we've got Bitcoin. Bitcoin now 93.8. I'm expecting volatility here before the FOMC meeting. And it's not only in Bitcoin that I'm expecting volatility. If we look at the stocks, you can do this on Banter Bubbles. You can see that most of the stocks are actually look like they're going, or they've opened red already. Palantir down 11.75%, Shopify down 2.28%, Vertex down 8.63%. So the stocks are going down. Remember, the S&P right now is in this no man's land zone between the 200-day MA and the 50-day MA. And it's just come out from a 9-day winning streak. And it hasn't done that since 2004. So in 21 years, we've never had a 9-day winning streak in a row. And now it's consolidating after that 9-day winning streak. Hopefully, the S&P is not doing what it did here in 2021 and 2022, where it went above the 50 MA or the 200 MA, and then it broke down. And you can see it wasn't able to do that. So it went above over here, and now it's got rejected. Hopefully, we're not repeating this pattern from 2020, 2021. I wouldn't be surprised if this is the scenario, though, because Trump's first tariff scare didn't actually get the rates to go down as much as Trump wanted the rates to go down. And as I said to you before, I think there could be a situation where they're going to reload, let the markets have a breath, and then strike another bullet to try and get those yields down so they can refinance the debt. And that's why I think it's such a big day today. The QQQ also got rejected by the 200 MA. You see that perfect rejection over here. And now it's starting to go down, and hopefully it'll bounce off the 50 MA. So what we're looking for here is we're looking for a bounce. When it comes to pre-FOMC days, there's always volatility in the FOMC days. You can see all the FOMC days are plotted for here. But if you look specifically at the day before, minus 9.4% here, minus 7.9% here, minus 4.9% here. There have been some up days. This one was the election pump. So you can see that you can kind of, if you put onto a spreadsheet, you kind of want to get rid of let's just see which date that was. That was 7 November. So you want to get rid of the November one over here. Take that out because that's like a bit of an election pump. And then what you'll realize is that generally what you have here is you have mainly down days before the FOMC. And yeah, so mainly down days before the FOMC. It's the pre-FOMC jitters that actually happen. Don't get flushed out by the pre-FOMC jitters. It happens every single time. It catches investors off guard every single time. We usually go down into FOMC, and then we usually either recover or go back, basically either we go back into recovery. So watch out for volatility in the next 24 to 48 hours. As I said, big FOMC tomorrow. The reason why it's a big FOMC tomorrow is because Powell knows he needs to reduce interest rates. And he probably could reduce interest rates because if you look at the real measure of inflation, which I think trueflation is the real measure of inflation these days. I don't trust the government's numbers. You can see that the inflation is at 1.46%. But the market is still giving us a 3% chance of a rate cut tomorrow. If you want some good alpha, what I recommend you do, you go here to this Twitter account here, 𝗦𝗁𝗔𝗔𝗍𝗍. Okay, they call this guy the Fed Whisperer. So if there's going to be a surprise, okay, now I don't think there is going to be a surprise because we don't have, he hasn't said anything, right? But if there is going to be a surprise, usually this guy, they call him the Fed Whisperer, usually he breaks surprises before anybody else. His name is 𝗦𝗁𝗔𝗓𝗏. He's one of the journalists that actually covers FOMC. I forget which public. Okay, it's from the Wall Street Journal. And he says, the Fed's dilemma, navigate a recession or a period of stagflation. The result, this is not going to be a cycle where the Fed preemptively cuts because there's a forecast of a slowdown. They're actually going to need to see it in the tangible data. Why? Because I think Trump shot himself in the foot. Because what Trump's actually done is, if there were no tariff uncertainties, they could reduce the interest rates. But because there are tariff uncertainties, Powell doesn't know what prices are going to do. And so they're going to have to wait for economic data to show that there's actually a slowdown. Unfortunately, that economic data is 2 to 3 months away. Josh, why have I lost my pricing in the top left-hand corner? And instead I see like bad text. It doesn't look so nice. I prefer it with pricing. All right, so all eyes on the FOMC tomorrow. As I said, remember, we will be live, but we will be live later. We're not going to be live for the show. We're not going to do a show unless something crazy happens in the market, right? No rate cuts. Although someone is expecting something, and I don't know what they're expecting here. So let me tell you what I'm seeing. 2 days before FOMC, the gold price is starting to move up again. It's starting to move up quite fast. As you can see, 2 massive green candles in a row. Now, what does a gold price, what does an increase in gold actually represent? It represents uncertainty. People move to gold when there is uncertainty, right? Now, or what an increase in the gold price represents is when there is a decline in the 𝗙𝗓𝗓. So if you have the 𝗙𝗓𝗓 breaking down, and the 𝗙𝗓𝗓 would break down a day before FOMC if they thought you were going to reduce rates. So if the market is expecting Powell to surprisingly cut rates, the 𝗙𝗓𝗓 would break down because obviously you're earning less yield. You will be earning less yield on dollars. People won't want dollars anymore, right? You understand that relationship, right? So basically, if the interest rates go down, then you're earning less interest on your dollars. Then you kind of say, well, then why should I have dollars? Like I don't need dollars because the interest rate on the dollars is much lower. So the 𝗙𝗥𝗢 hasn't broken down here. You see that? So the 𝗙𝗥𝗢 hasn't actually broken down here. But gold is spiking up. So you got to ask yourself, what's going on here? Someone here is uncertain about something, and therefore they're getting into gold. Now, I would be a little bit more concerned if this was coming during US times. But actually, if you look at the 1 hour chart and you look at when these pumps have actually started, they've started, like this pump over here started when Asia started to trade, not when the US started to trade. So this is like crazy rich Asians actually buying the charts. That's basically what's happening here in gold. So Asians seem to be going into gold, and they seem to be going into gold because of uncertainty. And I think it's probably uncertainty because of the trade war. The thing that shows me that this is uncertainty, that people are going into gold as a result of uncertainty, is it's also backed up by this chart over here. So if you look at this chart over here, this is first of all, you can see that the correlation between the between Bitcoin and gold is now tending towards 1, right? Which means that Bitcoin is moving closer and closer and closer to correlation with gold, which is good for us because gold seems to be on a bit of a tear, right? So that's good for us, that Bitcoin is getting its correlation with gold. But the thing that shows me that the market is really uncertain is actually this chart over here. This is the total amount of money in money market funds. Okay, so this is the total amount of money earning an average yield of, call it 4.5% in money market funds. And a lot of money is flowing into these money market funds. You can see that these money market funds are pretty much going parabolic over here. I actually want to maybe make this, let's just actually go to 2000. Bang. Let's see if it, okay, so you can see that the amount of money that is flowing into money market funds is actually going parabolic. This shows uncertainty. Why does it show uncertainty? Because what a money market fund does is it gives you a guaranteed return of 4.5%. So if you take that money right now and you invest it into money market funds and you lock in your returns, so you lock in your returns on a 5-year or a 10-year treasury yield or something, you're guaranteed to get like 4.5%, maybe 5% yields, right? And so when people are uncertain about returns and they see potential massive downside, what they say is, let's just go into money market funds. Let's just lock in 4.5% returns and leave it at that. Someone says, yeah, it could be Iran, Israel, Yemen. It could be. But if that was the concern, and I did think about that, but if that was the concern, what you would get is you would get a spike up in oil. Okay, but if you look at oil, oil's hardly spiked up. I mean, yeah, there has been a tick up, but it's hardly spiked up. So I'm not sure that this is an Iran-Yemen thing. This spike up was when Trump said that anybody that buys oil from Iran is actually going to get sanctioned. And what you see there is then you saw the price of oil going up because people couldn't buy oil from Iran. So what I'm seeing here is I'm actually seeing what 𝗙𝗂𝗅𝗍 data says. It says just in money market fund assets under management is at 7.4 trillion, which is a new high, right? You can see it in this chart over here. So you see that chart over here? That chart shows you that we've never been this high. In other words, but remember, this is also a combination of more debt than we've ever had, plus more money than we've ever had. Because remember, they printed a lot of money during COVID. Tons and tons and tons of cash was printed during COVID. That money had to go somewhere. It went into stock markets, it went into Bitcoin, but it also went into money market funds. And right now, you think there's a certain type of investor which says, you know what, there's a certain part of my portfolio which I'm willing to leave it in cash, and I'm willing to earn 4.5% in cash, and that's fine. That's perfectly fine. I'm willing to earn 4.5% in cash, lock it up, forget about it. And why am I willing to do that? Because I'm uncertain. And to reiterate the fact that I'm uncertain, I'm also going to put money into gold. But what I'm going to stay away from is I'm going to stay away from the risk assets. I'm going to stay away from things like the stock market and whatever else. And that's currently basically what's playing out right now. So that is the macro situation. Where are we now? Like if you think about where are we now, I think we're in a bit of no man's land. And to be honest, I don't think you should be buying. And I don't know if I'd be selling unless like some of you really want to get out of certain coins. I think you're pretty much in this like absolute no man's land. And the reason why I say that is because remember, my golden rule is you want to buy in extreme fear, and you want to sell in extreme greed. Right now, stock market is just between neutral and greed. So it's not a buying level, it's not a selling level. Like if you buy now, I absolutely don't see any reason why anybody should be buying anything right now. Got to be honest. Except maybe a little bit of SQD. And then, you know, like you look at the crypto markets, again, they are between neutral and greed. So it's really like, it's probably the worst place to be buying. The worst place to be buying. Why? Because we've just had a major pump up. Like we've just had a major pump up. You can see we went from 70, since the 10th of April, which is a month ago, we've increased 26%, right? But actually, if you look at this, we've been at the same levels. We've been chopping at the same levels for about 176 days. So it's probably the second biggest consolidation. The last consolidation was the one that we had last year before the elections. Remember, it was this one over here. And that was like, if I remember correctly, it was like 300 days. Let's just quickly go check whether we broke out somewhere here. 253 days. So actually, this has been quite a long consolidation in the 94, like let's go around the 90 to 95,000. Been a very, very, very long consolidation and actually not really... But we like these consolidations because remember, the bigger the consolidation, the bigger the move up or the bigger the move down. We want the move up, but it could be the bigger the move up or the bigger the move down. Remember, Ben Cowen's thesis is that we are putting in this golden cross. We're putting in the golden cross. We spoke about this yesterday, but for those of you who missed class yesterday, because I know a lot of you missed class yesterday, there we go. So there's your golden cross. Every time we do, a death cross. Every time we do have one of those death cross, you have a rally up, but you failed to break a higher high. See? And we've got exactly the same thing here. You had the death cross here. We failed to break the higher high. We're starting to break down here. He expected the breakdown to come somewhere here. So now the only way we can invalidate his thesis is we need to break up above the all-time high in this case, which is, I think, unlikely given. I mean, just look at the volumes here. Just look at the volumes here. You're getting a pump, but you're getting a pump on zero volume, and I don't know. I don't like this. I don't like this very much. White shirt Indian says, my girlfriend likes a big consolidation. Sure, okay. And someone else is waiting for Ralph Paul's banana zone. But what if the banana zone is the big consolidation? Could be one hell of a banana. Okay. I mean, some effort here, some liveliness here. You should be, I mean, all of this was actually written about in the Good Morning Crypto. So there's a good article here in Good Morning Crypto. He spoke about everything that I speak about in the show actually comes out before the show on Good Morning Crypto. It's a free newsletter. You don't have to pay. It's just go here and you go and sign up to Good Morning Crypto. Where is Good Morning Crypto. Just click on Good Morning Crypto, sign up for it. It's absolutely free, right? There's a couple of things to look at here. One, they speak about whether we should be worried about this dip that's happening today. No. He talks about the M2 money supply and how Bitcoin is exactly tracking the M2 money supply. But more importantly, he's showing this chart over here. Now, this chart over here says when we are blue or green, Bitcoin is undervalued. So right now, Bitcoin is not undervalued. When we are red, we are usually in a peak. So it's not in a peak. We are right now in the yellow zone. So it's heating. We're in the heating up zone or the breakdown zone. But he says we're in the heat up zone. And he predicts between 212 and 264 Bitcoin by November 2025. Now, I must say, I think that's ambitious, but I think it could happen. I actually do think that we can get to about those levels by November with a little bit of help. What's not helping us at the moment is this. So that yesterday was the 90 days that they were supposed to submit something around the Bitcoin strategic reserve, and they didn't submit anything. Now, I mean, I'm sure they're busy on 101 other things, and this is not like a deadline by like, you know, one of those crazy deadlines, but it would have been nice to hear something about the Bitcoin strategic reserve, and we haven't actually heard anything. We have seen some states that actually don't want the Bitcoin strategic reserve. So let's just have a look here, which ones they were. So yeah, you see, these are the states that don't want it. Montana, they don't want it. South Dakota and North Dakota don't want it. Pennsylvania don't want it. I mean, they can say whatever they want. If Trump says you're going to get a Bitcoin strategic reserve, you're going to get a Bitcoin strategic reserve. You know that, I know that. You may as well stop fighting it. Yeah. All right, let's talk about what we actually want to talk about today, which is this chart over here, which is, I would say, one of the worst charts I've ever seen in crypto. It's the ETH-BTC chart, and I think it's important to talk about this ETH-BTC chart. Why? Because tomorrow, May 7th, is a big upgrade for ETH. It's called the Pectra upgrade. The Pectra upgrade. That's happening today. I mean, generally, when ETH has an upgrade, generally ETH runs up into the upgrade. So if you look at before the Shanghai upgrade, ETH went up 86% in the 3 months or 4 months before the upgrade. And then with the 𝗙𝗏𝗀 upgrade, which was the previous upgrade, ETH went up 113% into the upgrade. ETH has a habit of going up into upgrades. It's happened for a long time. It's happened for, I'm just showing you 2 examples, but it's happened a long time. With Pectra, and Pectra is a very big upgrade, the price of ETH hasn't run up into it. In fact, if anything, quite the opposite. If you look at the Ethereum returns in Q1 and Q2 alone, ETH is down nearly 50%. That is really, really, really scary. Like really, really, really scary, right? So I think this is the part that no one's talking about. I'm worried that ETH is now in a point where people have become apathetic about it, where people actually don't care about it anymore, where people have pretty much written ETH off. And you can, the chart's basically telling you that story. No matter what people say, no matter what people do, no matter what the ETH community does and says, what you can see is that the chart just keeps going down and down and down. And yes, of course, you still get some people that are hopeful. Like you get Dennis from _𝗏𝗏𝗏𝗏, he says, ETH BTC still looks weak, but that doesn't mean ETH is dead. It just means the rotation hasn't even started yet. Yeah, bro, you keep telling yourself that. When it does, it will be quick. I'll drop a deep dive on this soon. Then this guy's talking about giga strength. Where giga strength, bro? Just does this chart here look like a giga strength chart to you? No, I mean, does that show any strength? There's nothing here, bro. Giga strength on ETH BTC. Giga strength, bro. Yeah, you want to see giga strength? Look at SQD. That's giga strength. See, when you talk about giga strength, that's giga strength. It's not this. This is not giga strength. This guy also says, watching this chart closely, ETH BTC hasn't put in more than 3 consecutive green candles, weekly green candles in years. If it does this time, maybe ETH has finally bottomed. I think ETH is just going to carry on going down. Let me explain to you why I think ETH is going to carry on going down. As I said, I think the charts are telling you their story. If ETH doesn't rally into major upgrades, and Pectra is a major upgrade, then there's a problem. So I asked ChatGPT, and actually, you should actually try this prompt on ChatGPT. So I used this thing and I said, assume you're a YouTube streamer and you've got to explain to your audience what the Pectra upgrade is. How would you explain what the Pectra upgrade is, right? So I prompted ChatGPT. Effectively, the Pectra upgrade is a combination of, hold on, let's just go to the bottom here. Okay, so it's a combination of Prague plus Electra upgrades, and that's why they call it the Pectra upgrades. And it's an upgrade to the execution layer. So let's talk about what this upgrade actually does. The first thing is it takes the EVM object format. So ETH smart contracts are programmed in EVM, so Ethereum Virtual Machine. And what they're doing is they're making it more modular, more secure, and more efficient, which effectively is going to make coding on ETH a little bit simpler, right? Then you're getting a whole lot of validator UX enhancements, and we'll talk about the validator UX enhancements. And then they're replacing the structure of ETH, which is Merkle trees, with this new thing called Verkle trees. Okay, now that makes ETH much more efficient. So let's actually break it down. Let's actually break down what actually happens. So the first thing is the upgrades to the EVM makes Ethereum faster, smarter, and more usable, right? The second thing that you're going to get here is you're going to be able to make your wallets into smart wallets. So you're going to be able to do batch transactions, sponsored gas, and social recoveries. So that just upgrades effectively the wallet. When it comes to staking, there's a lot of things here that have happened when it comes to staking. The first thing is, in order to become a validator on ETH, you've had to lock up 32 Ethereum, right? So in order to become a validator, in order to become the one of the nodes that is approving transactions, you had to lock up 32 ETH. So if you wanted to run a validator, 32 ETH, and if I wanted to run a validator, 32 ETH. But if I wanted to run 10 validators, I would need 320 ETH. Now, instead of that, what they're doing is saying, look, you can now stake up to 2,048 ETH in one validator, which means that the hardware requirements and the running of a validator requirements go down. So instead of running 32 2048 divided by 32 different computers, now you can basically run one and you can get the staking reward on one computer. What does this mean? It means that there's going to be less validators or less computers validating with the same amount of stake. So you don't actually ruin the security of the network, but that means that there's going to be more efficiency. And so the network load is going to be reduced. So imagine that it'll make effectively faster transactions, right? So yes, the way that the validators interact with the network, their staking time and unstaking time is going to be reduced, right? So it makes the validators more efficient. It makes the EVM coding language a little bit more efficient, and it allows for smart wallets and a whole lot of other network upgrades. Great. So that's amazing. Yeah, so let's just see if there's anything that I've left out. I don't think I've left out anything here. It's quite a technical upgrade, right? So look, it's a big upgrade for ETH, and ETH hasn't run into the upgrade. And for the first time in a long time, ETH hasn't run into an upgrade. And that to me just reaffirms my position that people don't care about ETH. And the reason they don't care about ETH is because I don't really think that ETH has a reason to exist anymore. Initially, they said ETH was going to have all these layer 2s, right? Now they're trying to optimize the L1 to compete with chains like Solana. The problem is that you've got all these layer 2s sucking up network space here. And then you've got now they're trying to make the layer 1 faster and competitive with Solana. But I don't think that ETH can compete with Solana. And I'll show you what I mean. Generally, when you want to be investing in things, what you want to be investing in is you want to be investing in the chart that looks like it's accelerating quicker, right? So if there are two blockchains and one is gaining users, and each one is gaining, let's say that there's two blockchains and one is gaining 100 users a day and the other one's gaining 100 users a day. But one is a smaller blockchain than the other one. In other words, it's gaining 100 users a day, but on a smaller base. That means that one is accelerating faster. So whereas ETH may be growing and may have good metrics, when you compare the metrics of Solana and 𝗬𝗎 to the metrics of ETH, what you can see is that those two blockchains specifically are accelerating faster. They're not bigger, but they're accelerating faster. Let me give you some examples of this. So when we look at stablecoins and we look at the stablecoins on ETH. Now remember, let's break down blockchains into a couple of things. The first thing is stablecoins, right? So one use of a blockchain is the stablecoin transactions on the chain. The second use of a blockchain is the dApps that are actually built on the chain, right? And the third one you could say is the number of tokens that are actually launched on the chain. So like those are the three metrics for me. Stablecoins we know is the killer use case of blockchains. Let's see who's winning when it comes to stablecoin activity. Then let's look at apps. How many apps are being built on the chain and how much revenue are those apps actually generating? And then the third metric you can then look at users and stuff like that. The third metric is how many new projects are actually building on the network. That is for me how I would evaluate which network I want to be investing in, right? Because all the rest are kind of vanity metrics. TVL is a vanity metric. Why? Because ETH, of course, has greater TVL, but whose TVL is actually growing more? Whose TVL is actually growing more? So we broke it down for you guys. Here it is. Here's a spreadsheet. We did a nice spreadsheet for you guys. I just want to show you, okay, so you look at stablecoins. Stablecoins on ETH have grown from the bottom, which is 65 billion, to 124 billion, which is, that's great. It's 100% increase in stablecoins since the bottom. But then we go to Solana. And even though Solana stablecoins are much, much, much smaller, they've gone from 1.5 billion to 12 billion, which means that they've had a 10x increase in stablecoins in the same time period. So one's growing much faster than the other, right? Obviously, the net number on ETH is bigger, but the acceleration is much faster. And the same thing if you look at 𝗬𝗎. So in terms of stablecoin growth, Solana is obviously the one that is winning here. In terms of percentage stablecoin growth, 𝗬𝗎 is also good, but it started off a very low base. It doesn't even have $1 billion worth of stablecoin. And if you look at the total stablecoin transactions, right? Because look at the number of transactions. Only 12.6 million transactions happened in stablecoins in February 2025, whereas 194 million transactions happened on Solana. Why? It just shows that people are not using Ethereum for stablecoin transactions. They're using Solana and Tron and a whole lot of other ones. If you look at the growth in stablecoin transactions, ETH is growing faster, but just look at the numbers here. 237 million versus 17.3 million. I think fair to say that Solana is becoming the stablecoin chain probably after Tron, okay? In terms of RWA value, so if you look at RWA value, Solana obviously started off on a very, very small base. So ETH is up to 6 billion, Solana is on 314 million, and 𝗬𝗎 is up at 17.5 million. Look at the total monthly transactions, which I think we have. I don't know if we have, the tokens that are launched. Researchers, do we have tokens that are launched in the spreadsheet? I know it was here somewhere. Total tokens, number of tokens launched in the last 3 months. So you see, on ETH, only 41,000 new tokens were launched. New projects. On Solana, 3.19 million. Okay, obviously a lot of that is meme coins. And then you have the same thing on 𝗬𝗎. You have 13,500 on 𝗬𝗎. So that is effectively how I'm looking at this chain. Then we said what we'd look at is we'd look at actual revenue generated, but not by the chain. Let's look at actual revenue generated by the dApps that are built on the chain. Remember, you almost want to think of the layer 1 as the internet. And then you want to look at the applications that are making money on the layer 1. So Solana itself is making more revenue than ETH and BNB and whatever else. But if you look at specifically, if you look at the top dApps that are generating revenue, they basically all Solana, the top dApps are basically all Solana dApps. And the dApps on Solana, the businesses on the Solana rails have generated $162 million in revenue. So what you can see is that Solana has become the builder's paradise, where most users are using the apps that are built and therefore building on the revenue. And so for me, I think that ETH has a problem. I think that ETH has a massive problem. I think nobody cares about it anymore. And even when they do these upgrades, no one's responding anymore. And I know that there's some people that are still holding out hope, but to be honest, as more and more of these signs are happening, I see a bit of hope here. I see people still holding on to hope that maybe ETH will one day explode. And, Dennis is a friend, but, when I see him talking like this, it just feels really desperate. I just don't see a world where, ETH just recovers more than Solana. I wish it does, because I've got a small leverage position there. But I really don't see a world where it actually does that. Anyway, let's see if I'm right or they're right. Someone says account abstraction. Yes, they've now set up for account abstraction. BlackRock begs to differ. I don't know if BlackRock begs to differ. They haven't bought ETH. Their 𝗏𝗏 fund is also on Solana. May we have the spreadsheet, please? Yeah, Josh, put the spreadsheet for them. For the good people of banter. Put it there. The front runners did get it. All right, guys, here's some good specials for you today. Number 1, remember to subscribe to Good Morning Crypto. Number 2, if you want a free Bitfunded account, what you need to do is sign up today to any Bitfunded challenge. So, for example, if you sign up to a Bitfunded $50,000 challenge, you buy one, you get a free Bitfunded $50 challenge. So whatever you buy today for the next 24 hours, you get one. Those of you who don't know what this is, it's a prop trading firm. What is a prop trading firm? You trade with demo money until you pass stage 1 and you pass stage 2. So you got to get 8% in stage 1 and 8% in stage 2. And then the third time you're trading with real money and you keep 90% of the profits and they keep 10% of the profits. So it's basically saying, look, you pick your amount, 10,000, 15,000, 25,000, advanced, even 100,000. You pay, if you want to take a 10,000 one, you pay $99. If you get 8% on day 1 and on stage 1 and 5% on stage 2, then you start trading with other people's money, but you keep 90% of the profit. So I think it's the easiest way, if you don't have a big account or if you don't want to wreck a big account in these markets, rather play with other people's money. Just pass the first 2 challenges. You can pass them in one day. I'll pass them in one day each. And you will actually start winning. Now, today only, next 24 hours, if you buy a Bitfunded challenge, you automatically get a second challenge of the same one absolutely free. I haven't yet told them that I'm doing this challenge, so I think we should basically phone them and just tell them what we're doing, because, hold on, let's phone them quickly. Because I haven't told them that I'm giving these things away. So now he could actually, the problem is that, the guy who actually runs it, he could actually get a fright when you all start asking him for your free challenges. We're phoning him. I think he should answer this call, because if he doesn't answer this call, like, I mean, he might be getting a whole lot of upset customers. But he's in Dubai, so he's probably putting on his VPN. He's going to get a big surprise when you guys all phone him for your second challenges. Okay, I'll call him later. He's not answering the phone. Anyway, I'll see you guys again tomorrow. Remember, no show on the normal time tomorrow unless the markets do something crazy. Otherwise, we'll be here tomorrow night bringing you FOMC live. Until then, trade well, my friends.